Okay, I'm going to turn my camera off. There's a few concepts which I think were important in this second trader course. However, a lot of it I think was less impactful than I believed necessary to learn. So, there is a couple of core concepts which I'm going to go over today. One is going to be one we've all heard of, which is going to be the double purge theory. One is going to be the idea of our swing points, and this is the same thing as candle range theory. And the third thing I'm going to talk about is multiple time frame SMT, and I've already talked about that a little bit. So if we can understand these three core concepts, right, coming out of that second trader course, I think they're useful to add to our repertoire, right, our current TA understanding, and you can choose to integrate them into your trading models preferentially. However, the understanding of them is going to be better, I think, in determining things like bias and just understanding market structure a bit more intimately. Okay, so these are the three concepts which I think are important. In addition to stuff I've already taught you from that course, other things like order pairing, right, which we've already covered. Already covered in detail. We also talk about entry times, patterns, right? He teaches something like essentially the H4 power of 3 is a concept that is taught as a model in this next course, but we've already gone through these things, so I don't want to overwhelm you with information. That's always less impactful than just learning what's, I think, most pressing. So let's start with the double purge theory. The double purge theory is something that ICT, right, talked about in one of his first lectures in the 2022 mentorship, and it relates to the idea of taking participants out of the market. So if we are in a price move, let's say the market, right, has put in a consolidation and now has started to expand. Oftentimes we will see something that looks like this during reaccumulations or before large distributions. So in the same way, right, that we get accumulations usually purging both sides of the range, the double purge theory talks about how market makers will at times leading up to a large institutional move take out both sides of the market. So they will liquidate both parties of liquidity. All right, let's just make this a little bit lower. Something like this. And this would be your double purge, wherein you take, right, the side of liquidity you are going to be eventually targeting, followed by the side of liquidity that opposes that higher time frame draw on liquidity, before eventually creating a low resistance liquidity run to this high. So it looks something like this. Buy stops taken first. Sell stops taken second. And we create a low resistance liquidity run into this high. Now this is only impactful to the extent that there are two more conditions on price. The first condition being there is a higher time frame draw on liquidity. And there is an array of interest, right, at the area of the double purge. So without an array of interest at the area of the double purge, right, buy stops, sell stops, and then we go into the higher time frame draw. And without a higher time frame draw, this mechanism of essentially broadening the formation of the price run before delivering to the draw on liquidity is less meaningful. In which case we might not expect a double purge, but simply an ICT 2022 model that looks something like this. This is the exact opposite of the 2022 model, right, which would look like this. Higher time frame liquidity sweep, break a structure lower, retracement into inefficiency, continuation lower, right? So these two mechanisms of price delivery are in diametric opposition, and the 2022 model, where it will succeed, will fail when we have this setup, right, with an institutional level, which which we refer to as a point of interest, right? And then a higher time frame draw on liquidity. So this is actually less meaningful and less impactful as a general schematic, but you will see lots of these general schematics. And if you go into, let me find one for you somewhere in our server as well. I've definitely posted one, and I can put it in here just so we have something to look at. I'm going to find a schematic for you guys just so we can save it under our notes. There we go. Okay. So here we go. I'm going to put it in this education. Is the screen blurry? Maybe it's because I'm not sharing the actual application. Let me try now. Okay, it should be higher quality now. If it's lower quality, it might be the Wi-Fi you have, Taylor. Not entirely sure. Okay. So if we all click right now together on, right, that AFEES market analysis link I put in education, this is going to be a general schematic, right, that the MMXM trader provided for the double purge theory. And as you can see, he talks about in the bearish case, sell stops being purged first, then buy stops being purged second into a premium or a higher time frame point of interest, and then a low resistance run to the low. Likewise, right, in the bullish case, exactly what we just saw, with sell stops being purged second, buy stops being purged first, and then a low resistance run into the highs.
Sorry, Fees, I'm not sure if we can see.
Oh yeah, I sent the link in the education thing, but I'll just share my entire screen if that's easier. Can you see now, Todd?
I was seeing, but something you were drew a diagram that you were pointing to, and it wasn't visible.
I see. Okay, I was talking about this one here. Do you see my screen now?
Now I see it.
Okay,
It's
perfect. Sorry about
but
no worries. Thank you for telling me. I thought I was sharing it. My bad.
Okay.
So here's an example, right, on a chart that we can see is more annotated, where we have a range, right? We have a discount area of interest, and we have equal highs in the market. This is all fractal. So the first thing we see is the buy stops in the direction of the draw on liquidity being purged first. Then we see our sell stops being engaged second into our array of interest. And then finally, we take out that low resistance high. In this case, you can see beautiful delivery because we induce equal highs and we have a very nice consolidated range low, right? There you go, right? And then we have the exact same thing happen as we broaden the range to the sell side with the sell stops purged, the buy stops, and the premium array, which is going to be this daily swing high. And then we deliver down to the lows, again, very equal lows in the market. So this example that I've given to you here is probably one of the cleanest examples you will find. However, we can utilize the concept, right, of the double purge theory to align ourselves with bias, both intraday, intra-week, and on lower time frames. So if we hop into a Dixie chart right now, let's take a look at this idea of the double purge, and let's look at it on our weekly chart. What can someone notice about last week? I'm going to mark out the previous week low and the previous week high. What can we notice about this weekly candle? What happens?
You check out the low and high.
Yes. I want you to also expand on that answer, Original. What is the higher time frame draw on liquidity? And we're going to answer that question by looking at just this weekly chart. We have an inversion array right here, right? We have a bearish order block. And most importantly, we have failed to offer fair value in a continuation. What do I mean by that? The market will either offer fair value and continue in a pro-trend move, or it will fail to offer fair value and seek the opposing side of the range. That's all the market is ever doing, right? We can prove this to ourselves by analyzing some more price legs. Here we have a failure swing in the market. We also have in here, I'll mark it out, this monthly inefficiency. Go back to the weekly chart. The market in this case fails to offer fair valuation, right, on this monthly PD array, and instead will now seek the opposing side of the range. So upon failing to offer fair value and then moving higher, we can now look for the other side of the range to be targeted. In this case, right, we have a monthly swing low, which is going to be external range liquidity. As you can see, as we fail to offer, whoops, I went too far back. It should be in here. We have this monthly rejection block right in here. Let me mark it out. It's the same thing as liquidity, right? A rejection block is the same thing as taking liquidity because we had a divergence with the bonds. Anyways, as we fail to offer fair value, we now deliver into the other side of the curve. Okay? Same story is told here. As the market fails to offer fair value and then continue lower, it will now seek, right, premium liquidity above the market price. Right? Seek premium liquidity above the market price. Another example is in this small inefficiency right here. Again, small, but still a weekly inefficiency. Fails to offer fair value, will now seek premium liquidity. Offers fair valuation, right, inside of this inefficiency, continues to seek premium liquidity. Again, premium liquidity has been offered, price closes through. So original, now that I've ranted, what is the draw on liquidity for the next week? In this weekly candle, we can see we've taken out the high and the low. What is the overall trend? Bearish or bullish?
Bearish, seeking towards internal.
Nice. Internal or external?
Oh, external on that end.
Nice. So with the expectation that we just had of a double purge theory, what do you think is realistic to expect to be taken first? The buy stops or the sell stops? Let me get rid of the lipstick.
If we're going down, technically the buy stops.
Yes. And what must be above where the buy stops are?
Well, what must be above the buy stops?
Some sort of
a high?
Yeah,
or previous high?
An array, right? An array of interest?
Oh, sure. Yes.
Okay, perfect. So let's go down time frame and look at exactly how the market delivers. So you can see this is fractal. The weekly chart does two things. It reaches up into previous week high. So look at the weekly chart, right? Monday, Tuesday, Wednesday, Thursday, Friday, right here. So we reach first into the direction of the draw on liquidity. My apologies. That should be sell stops. Sorry, original. I think I baited you with that response.
You did. You're right. We're doing the double purge right now.
I was saying it the right way in my head and the wrong way out loud. Sorry, I completely baited the original. He knew what he was talking about. What side should we take out first, original? The sell stops or the buy stops?
Yes, sir.
Which one should we take out first if we're bearish?
If we're bearish, we should go sell side to trap
Sorry
or
about
induce
that.
others.
I trapped you. So as you can see, we decline into our sell stops first, right? Then we offer the buy side of the curve second. Now this will create a low resistance liquidity run into that low. And like I said, it's not just going to be a random double purge. What we need to see in addition to that double purge is this framework, okay? We need to see, in this case, the bearish case, sell stops being purged, then a premium key PD array. This is what's critical. We're not trading a pattern, guys. What do you notice rests above these highs on the daily chart? What is this called?
Relative equal highs.
Yes, which is an equal highs, which are an array, but also, what are all of these candles called in here?
Order block.
Order block. What about just this one?
Propulsion ball.
Nice. Do you notice how we fail to trade in to this up close candle with these equal highs?
Gotcha.
So price will create a double purge at not only key times, what's the time before an expansion, but also at key areas where there is a premium array in the market that is yet to be engaged with. When I say a premium array, I mean, if we draw out a dealing range from this high to this low, The only premium array that is yet to be engaged with in this price leg, right? Or a premium array that hasn't been engaged with is what? Do you see this propulsion block? How it overlaps premium or discount in this case? I should reverse this so it's red on the top. 1 second. See how this propulsion block is in premium of the range? Right here. And this doesn't reach up into premium. So we have a reason for price to use this area as a double purge. It does. It offers sell stops, then buy stops. And we can use this not as a trading pattern, but as a bias pattern. Moving into the next week, you notice how in my weekly review I was bearish. I utilized the idea of a double purge to create a bearish bias for these lows. And as you can see, price has expanded into this low resistance liquidity run low right here using buy stops or sell stops, then buy stops, LR to that low. It's a function of the market makers to disrupt positions. So there are weak shorts above this high and there are weak longs below these lows. Again, what are these types of lows, Todd?
Equal lows.
Equal lows and equal highs, right?
Right.
So there are weak longs and weak shorts. The market will disrupt both positions before delivering the pro trend. You'll hear me say this all the time. The directional higher time frame move. A double purge is not significant without a draw on liquidity. It's just a pattern, and we don't trade patterns. Likewise, we will notice similar things happening on the buy side of the curve. What do we see here? What does this look like to you guys?
The double
purge. So if you don't use it as a pattern, what can you use it for, Todd, for the next weekly candle as we build out a narrative? Again, price does the same thing this week. You notice what phase of the market delivery are we in? What did I say is likely, these things are likely to occur at? Sorry, I got rid of the schematic. But where are these double purges likely to occur? During what phase of market delivery?
Accumulation.
Nice.
That example you had just previously, I guess you're on the daily chart.
Yep.
Kind of was like a double inducement, right?
Yeah, because we had double top and double bottom, right?
Well, also that, but like having the kind of engineered liquidity where we didn't reach the propulsion block and the EQ of the range.
And then we come back into it before moving over. Yeah. So one thing MMXM Trader doesn't teach in his course, which I didn't like, which is why I'm teaching this to you a bit different, is I did not prefer how we did not talk about where to expect double purges. You should look for double purges in context areas, guys, because the way he taught it, in my opinion, was more of a pattern. And I have nothing but respect for him, but I don't think a double purge in all cases is going to be helpful. But in key levels of accumulation of market cycles, yes, it's critical, because you'll notice that we are broadening the formation of the expansion before we leave it. So I will show you another example, and I want to prove to you where you can expect to see these double purges. You want to wait for an obvious consolidation of the market, where in the market, right? Okay, I'm going to just put my cursor right here. Do you see the obvious consolidation of this market and the higher time frame order flow?
Mm-hmm.
Right? We see we've gone into a weekly consolidation here, right? Do you see this doji right here?
Mm-hmm.
How does price leave this doji?
Taking out the highs.
So let's zoom in again. If you can use this as a part of your thesis in generating like a bias for a week, right? That can be critical, because not every time is a double purge, such as this one here, going to work. Right? Do you see how this double purge doesn't actually revert in the buy stops being taken, Todd? Sell side, then buy side, but then we come, or here it's actually buy side, then sell side, and then we keep going lower, right? Let's go down to a daily time frame. Let me draw out some, get rid of that, get rid of this, get rid of this. Okay. Here the market does what pattern? What is this called?
Stop hunt.
2022, right?
Mm.
Now, if you treat, I'm going to say this slowly, if you treat the double purge as a pattern, you will never unlock the value of what it is trying to accomplish with respect to order flow. The double purge is not an entry pattern. The double purge is not a pattern that appears everywhere and always gives the same results. Think about the dynamics of what is happening. The double purge is exactly the opposite to the 2022 mentorship model. Does that make sense? It's exactly the opposite of this model. Now, why would ICT teach a model, right, that could be easily inverted and fail in half the times, like this one? It is because the 2022 model is a continuation, right? The order flow here is bearish. Price leaves this weekly accumulation doing what? Running the buy stops, closing inside the range, displacing through the sell stops. The question we ask ourselves is, where is the draw on liquidity? Lower or higher?
Lower.
So is this a double purge candidate?
No.
No, it's a 2022 model candidate. Look at how beautiful this 2022 model prints. Right? Fair value gap, volume balance. Beautiful, right? OTE. I'm pretty sure this is a textbook like 2022 model. Let me see if I can draw up my fibs. Look at that. This is textbook, right? This is what ICT taught as the 2022 mentorship model, right? Run on buy stops, displacement, market structure shift, fair value gap, and OTE, target the lows. The difference between that and the stated delivery in this case, here we have another 22. I had to see which side was ran first. So if we had ran the sell stops first, then the buy stops, it would have been a good candidate. Let me find an example again of a weekly consolidation breaking out using a double purge. It's very similar to the inducement model. Let's look for daily consolidations. This is nice. Daily consolidation low into our key PD array. Fantastic. Okay. Do we reach in? We reach into the gap, I guess. It doesn't come into the volume balance. Would have been nicer to come into that volume balance, but here we have swing low formed in the market, right? Look, up, then down, then up, then down, right? So this here forms a swing low. Then we have another internal run, another swing low formed right here. So we can really say that that's a swing low, right? And then you get fractals of the same delivery. You get fractals of the same delivery. Look, all of this range is operating at double purge to go higher. Sell stops taken, buy stops taken, sell stops are LR because we're still accumulating. Okay? Then the buy stops are taken by one tick. The sell stops are taken right here. This is a protected low, right? We just talked about that. It's an intermediate term low. Takes out this low, lower low here. So now when we form this swing point, right? Buy stops, sell stops, LR to that high, just by one tick. So it's the way in which price moves out of the accumulation which double purge can be used for. Now, it's even better if you can recognize advanced market structure with this. Like here, we have a higher time frame array, of course, and we're accumulating in it. So we want to say, where is the swing low going to be put in? Because all of these daily candles are simply just very much so dojis in accumulation. But we get a unique swing low put in because it has two higher swing lows and also purges liquidity and leads to a sys-D here, right? So we can say this could be a protected low. Now once we get this run on stops below, it's actually this low, right there. Once we get this run on stops, we can now qualify this to be the intermediate term low, this to form a new intermediate term low, and the best entry is going to be this next low formed. But that also is forming with a double purge. Buy stops, sell stops, LR to that high. So this is the idea that we're looking at swing points, and when we can use the double purge inside of these swing points, it becomes very powerful. I'm trying to look for one more example. I'm on the Dixie Daily. I'm just trying to find like higher time frame examples. Oh, this is really nice. Okay, we have obviously the draw on liquidity is where? Where's the draw on liquidity, guys, in this price leg? If I drew a box around this entire price leg, where is the draw on liquidity? Someone tell me.
The high?
Which one? This one?
Yes.
Okay. Why is that the draw on liquidity?
Because we're bullish.
Sure, and we can go up a time frame and probably see what above that high, a higher time frame array, right? Like maybe it's a monthly swing point. It's a monthly swing point, right? Make sense? Why that high is the high, because it's a monthly ERL original?
Yes.
Okay, perfect. So let's look at just this fractal of price delivery. On the way to this monthly swing point, where there's also another, right, draw on liquidity up here. But let's just look at just this fractal. On the way to this monthly swing point, the market starts. What phase of market delivery is this? Someone besides original. What is this?
Consolidation.
This blue box is a consolidation or expansion?
Expansion.
Expansion. Chitra, does that make sense? That we're expanding here?
Yeah.
Okay. But you're right about the fractal nature of this. So let me actually, you guys are both right. What is this in here?
Consolidation.
How do you think price might leave this consolidation?
Double.
By going up.
Could use a double purge, right? So we could look for anytime we run a significant high in the market here, right? We could look for the low that put in that high to be ran. And then we could say if the market is bullish, the next draw is going to be here. Now on the daily chart, it's not as clean. I don't see a clear double purge. Maybe on a 4-hour chart, it'd be more clean. But what I want you to do is train your eye to look for double purges, like Chitra said, in these consolidation zones. So we're expanding, and we have a consolidation here. Now, what about this? What is this? What's the market doing?
So that would be a double purge like inducement.
Yeah, it is. But what let's not get ahead of let's just go one step at a time. What is the market doing here?
Accumulating.
Accumulating. How do we know that? What's a good way to tell what the market is currently doing?
It trades inside a range for a particular length time.
Nice. I like that response. So what I like to do when I look for to confirm consolidations, I look for two things. I usually look for PD arrays to be disrespected, IRL to fail. I also look at bodies instead of wicks. Okay? What do I mean by that? What's the first thing we notice is failing in here? Do you guys see this inefficiency in here? Does it support price higher? This bullish volume imbalance, does this support price higher? Yes or no?
No.
No. It fails.
No.
Okay, cool. It fails. What about this down close candle? Do we get any support at this down close candle?
No.
What about this
No.
RDRB in here? Any support?
9.
The market
None.
is instead offering what?
Sell side delivery.
Yes. And before it offered what? What's up here?
Buy side.
Okay. Let's do a quick exercise and turn off our candle wicks. And I want you to pay attention, right, to the bodies. Whoops. The bodies in here, right, are closing inside of these higher time frame inefficiencies. But as you'll see with these wicks, what they're going to do without us looking at the wicks, what we can expect is the wicks to be closing, right, below the previous wick. So what we can do is we can confirm this by guessing what this is going to look like with wicks and then confirming it, right, on our wick chart. Because a consolidation often finds liquidity sweeps as opposed to structural shifts. Right? All we do is consider the bodies over the wicks. As you'll see, it's exactly like we drew out, right? Look at where the bodies are closing. Is this closing above or below this low? Even let's just say this low that it sweeps. Is this candle closing above or below it?
Above.
Above. Okay.
Above.
What about when we come up here and let's look left? What about the sweep we had to the left? Are we closing above or below? Then we come in and we form another liquidity sweep of this high. Close below, right? So in this range, we can confirm we are consolidating by looking at PD arrays being disrespected and the market targeting external ranges. So the market is, instead of offering expansion, right, off of arrays like this, is instead seeking the low, seeking the high, seeking the low, and generally closing inside of the range. Not expanding the range, but just broadening it. We're on either side. We're broadening this range as opposed to expanding, retracing, expanding. That's how we can confirm consolidation. That's where we're going to look for the double purge to come into play. So Todd, where does the double... First of all, Todd, bullish or bearish out of this consolidation?
Bullish.
What do we expect to see if we are looking for the double purge as a narrative tool?
Buy side taken first.
Do we see that on this chart?
C.
Where?
Right.
There. Why is this so interesting that these buy stops are purged? What do these buy stops rest below?
They rest below the long-term.
Higher time frame.
Yeah.
Daily market maker buy model will be complete at this monthly high.
Determinants,
Yeah, right. So we can see a classic two-phase delivery. Smart money reversal. And MMXM Trader doesn't talk about this much in his course. This is why I wanted to wait some time and actually do some of my own research before I taught it back to you guys. Because if you can frame this out of key consolidations of the market, that's where I think it has the most value. Looking for it here. Looking for it here. Also, by nature of that, looking for it where? Here.
Yeah.
And you're going to see these things have power with context. Without context, they're useless, right? Looking for it where? Without context, it's useless, in my opinion. Seriously. But here, you can see very clearly, this doesn't give us a clear daily double purge. Nothing I'm very much interested in here. But here, I see a beautiful sweep, the previous consolidation high, below the completion of the daily market maker buy model. Remember, order pairing means that these longs are being distributed to where, Todd, and only where?
Top of the original
Right there,
consolidation.
right? They're not partialing in here. They're reaccumulating in here. This is why we use...
Like me.
Yeah, this is why we use mitigation blocks. Again, there's a reason why if I drew out this candle right here, and I extended this right, do you think any bodies would close below this candle if I extended it right, guys? No. We're using it as a mitigation. Look at where the bodies are holding. What is this called?
Yeah. Beautiful.
Mean threshold, right? So they're not partialing above these highs. They're reaccumulating and inducing a market maker model expansion from what? A market maker model accumulation. There's phases of market delivery. So the part of this market maker model in here is coded for accumulation. They will leave the accumulation to target the daily market maker completion, which is the monthly high, using potentially a double purge. So we'll evaluate that. Buy stops taken first. Then we will look to see if sell stops are taken second. And I don't believe in using this as a pattern to enter. I believe in using this as a reason to have like a narrative, to build out a narrative for why we're leaving the consolidation. Because we're consolidating for weeks. It'd be hard to trade this, but now you have a reason to expect that once we take out this high with an incredibly obvious manipulation candle, closes back in the range, sweeps out the high, and then we get this large move lower. Now it might be we're finally accumulating to leave. So what has to, based on what I said in the schematic, what needs to rest below here? Someone that's not Todd, that's not Chitra, and that's not, I'll pick on someone. Ellis, what needs to rest below these sell stops for us to qualify this double purge?
Time frame PD array, or like a
Yes.
discount in this
Yes.
case.
A PD array of interest. Again, it's just a pattern unless we have a reason for price to take this first, this second, and then be a low resistance run into this high. Let's look up a time frame. Wait, first of all, what is the function of a consolidation? For those who have seen my original MMXM video, what does a consolidation do? Yusuf, what does a consolidation do? What rests above or below it? Yeah, what rests below a consolidation, for example?
Below a consolidation, if it's a market maker sell model, below a consolidation is our higher time frame PD array, and if it's a buy model, above the consolidation on the left side, that'd be a higher time frame PD array.
So this is
or ERL.
this is a fractal. So this accumulation results in what below this accumulation for this sell model?
Stops.
Yeah, and a higher time frame array, right? Because we've expanded.
Exactly.
Again, look at the phase of delivery. Expansion into accumulation. What does that expansion now have here? A time-based array, right? This is offered inefficiently or efficiently? Someone tell me. Look at all these candles.
Efficient.
Is this efficient or inefficient?
Inefficient.
Meaning there must be, once we put in a time-based consolidation, there must be a time-based array to reflect this inefficiency in delivery. That's why I tell you a fair value gap is more important in the time delineation than in the price. A weekly fair value gap, which we're going to see here without me even needing to look, we're going to see a weekly fair value gap or a monthly fair value gap or something. It's because we put in an expansion, inefficient, one-sided, into an accumulation. So now we're going to come below and let's see where we engage. Who would have thought, right? What do we see here? Do you see how we don't need to look at the weekly chart to see that, guys? See how it's all given to us on this daily chart? The context is given to us here, right? Did everyone know that when we went to the weekly chart that we'd see a gap there? It's okay to say no, but was it in your head? Are you visualizing what this looks like on a higher time frame? Yes, no?
But at least I have a question.
Yeah.
For us to go for a higher time frame PD array, like a fair value gap, would you recommend using the time frames, like for example the hourly, daily, monthly,
I
or the
see.
4 hour?
So you're saying should this be like a monthly gap in here, right?
If we were looking at the daily.
So in this case, because I'm looking at the daily expansion leg, what I know is that is price likely to reach all the way back down into these lows? Or is it more likely to reach the highs? And this is where we're going to use a concept like swing grading. At this point, original, in this market maker model, where is price located?
Around 75%.
So is it more likely to complete the buy model or fail and revert back to the range?
It's more likely to complete the buy model.
So on the monthly chart, looking at this daily expansion, where's the next monthly PD array going to be located? Think about time. It has to be located around the close of the month, right here, right? Like a monthly order block right there, right? For example. Monthly chart. Now this isn't intuitive. It's right here. This isn't very intuitive without like staring at price for a long time. But take my word when I say, if price is very, very close, right? You can see it comes in and taps it. But if price is very, very close, it's more than likely to just expand to the draw, correct? So do you think we're going to get a deep retracement? Say there was a monthly FVG right here, and there's a weekly FVG right here. Which one do you think is more likely to get retraded to?
The one closest to it.
And you can see that in all time frames, right? For example, today. Actually, I want to keep that. Whoops. Let's look at this ES chart. I want to prove that to you. So do you see how price is in a hurry to reach in to this this premium level of the market, like in this afternoon with this expansion? What do we leave? Oh, let me drag it around the other way. What do we leave in this discount area? What do you see here?
Ooh, a breakaway gap.
Yeah, right? Which is why we usually look for, like, this is very similar to what we're looking on the dollar chart, right? Except it's a different form of accumulation. But it's still accumulation in here, right? Do you see the similarity?
Yes.
Look what we leave here, these breakaway gaps, right? What we refer to is just the most immediate time frame in efficiency that's going to leave us higher, because price is showing a willingness to displace, and then there's time that it needs to do that in. We'll look at this example today after. It's a good example. But let's go back here. So what the answer to that question is, look on all the higher time frames, okay, Original?
Sure. Okay.
So on the monthly chart, you can actually see we do reach into a monthly down close candle. Where is it? But we reach into the wick area of it, right? See that wick area we reach into? The more obvious point for me is going to be that weekly gap. Do you see that? And then
Sure,
also
yes.
the weekly change in state of delivery, right? Look at how precise that is. Regardless, right? Let's not get too off topic. Sorry, I have a bad habit of doing that. What we end up doing is we leave the consolidation, right? Using a double purge. And we come into, like Ellis said, a key PD array. That's going to frame the end of the consolidation. What else do you think we'd look for inside of here, based on our understanding of when price reverses?
SMT.
With what, if it's the dollar?
Bonds? No.
Nice. Yeah, nice.
10-year.
Bitcoin.
There you go. What do you see? Do you see that? It's going to be a bearish divergence, right? So this should come in and take out. Wait, shouldn't they be moving together? They move inverse.
I don't know so much. But
Chitra, do bonds and dollar move inverse?
They should, yeah, because dollar interest rate move together, right?
Okay.
So bonds should be the.
so that was close.
They move inverse.
Okay.
So the SMT was there, right?
I want to see. Just want to see it. It should take out buy stops then, or should fail to take out buy stops.
Right.
It takes them out. It takes them out. Right. It's these stops.
Look at what about Euro USD?
Yeah, let's look at Euro, because that'd be a good idea.
Euro. I don't know Euro. Maybe Euro USD.
Like 6E?
No, not 6E. Euro, like the cross Euro USD. Because if you're looking for against the dollar, right?
Yeah.
No, it's the same. It's inverse.
Same thing. Okay, well, yeah, I don't really use a lot of SMTs, but if this was the indices, we'd expect to see an SMT here, right? You get the point. Double purge, SMT, all putting it together. Everything we learn is not in isolation. We're just trying to say we want to look for things, to build on each other. So we want to see an SMT, at these lows, potentially, with a correlated asset. Okay, let's reinforce that this is not bullshit by doing the exact same example, right, on the sell side of the curve, and then we're good. Then we'll look at today's example, and then I'll move on from this double purge theory, because really I think it was something that was like very, very like exciting and kind of hyped, but the use of it in theory is really, really less than I personally, right? And I'll teach it to you. Feel free to use it however you want. Okay, bearish side of the curve. What do we notice about this delivery? Actually, let's look at here. Here's an extended example. Let's look right in here. Is this an equal bottom? This would have been another good example right here, right? Sell stops taken, buy stops taken, LR to that low. That would have been a really good example. So we put in an equal low there. This would be a very nice similar example of the double purge theory. In this case, we just put in an equal bottom. We have a higher time frame one. For example, on a weekly chart, you'll see we have this one, which is going to be this. But I would have really liked to see that double purge right in that area. It would have been very similar to right in here. I'm going to call it that anyways. You guys see what I'm talking about right there with the double bottom? That's exact. Does it hit it, or is it actually a true double bottom? Oh no, it might take it by 1 tick. Oh, it does. Oh, awesome. Okay, nice. Nice, guys. Nice. God, that's satisfying as hell. Nice. Okay, wait, let's see it. I think it's 1 tick. Please. It is.
Shadows.
It is. Look at that. Sorry, this is the kind of stuff that gets me so excited. Do you see that? It's 1 tick. Look. That's awesome.
Bust it at the microscope.
Dude, that is awesome. Boom. 1 tick. Okay, nice. My example prevails. Yes. Nice. See, I never script examples. 'Cause I like to find them with you guys live in price so we can identify them together. And I was really hoping this would be one. So there we go. What's that? Wait, first of all, what is the state of delivery inside this accumulation, guys? What side of the market are we on? Sell side of the curve or buy side of the curve?
So side of the curve.
So we're expecting to see what taken first?
Sell stops.
Nice. Awesome. Sorry, that I got really excited there for almost no reason, but hopefully you guys share in my passion.
You're good, man.
Hopefully you guys also got excited seeing that 1 tick. Come on, Todd. That guy, don't lie to me. That got you excited. That got you excited. Don't lie to me. Okay, so same thing happening right here, right? Sell stops taken first, 1 tick. Buy stops taken second. Now we're not using it as a pattern. We're not going to turtle soup that high. It's not how we trade. What we're going to use is as a narrative for what is ending. What do we think was ending when we see that, Todd?
I'm sorry, I was looking at yes.
What do we
Say
think
it
is
again?
going to be ending when we see? We're not going to be using this as an entry pattern. So I don't want to see any of you guys next week saying, "Oh, I love that lecture. I'm now going to start turtle souping this high." No. What is this telling us about order flow? What is ending? What phase of market is ending? Potentially.
Accumulation.
Yes. So you get aligned in the distribution leg when you get that break of structure. Look at what we come back into. Remember what I told you guys? What if this is a 5-minute chart? Where do you guys want to enter on the 5-minute chart? Do you see this SysD? Beautiful, right?
Definitely.
That's the entry. You're not turtle souping the high. We're not doing that, guys, because we're not trading reversals. We're trading confirmation entries. Boom. Again, likewise, where are you entering in this price run? You know that price is very likely to reach into this high, right? And you know it's going to reach into this high as well. Well, now you can enter when you have confirmation. Now you know that this inversion gap is a good area to look on a lower time frame, right? There you go. You're not bottom ticking this. Like, you're not doing that. It doesn't make sense. On a lower time frame, you're also going to be able to use what? This inversion gap, right? You have confirmations, guys. So this lecture I'm teaching you, I don't want to see next week you being like, I'm so happy I top ticked this double purge. That's not how it works, because it could reach higher. What you're using it for is to confirm a change in state of delivery from accumulation to expansion. And that's the only place you're going to look for these things. And Mark McGraw doesn't say that in his course, but I've done back testing, right, before I've taught you today, and that is the way to do this optimally, okay? Trust me. Take my word for it, all right? Now, your homework is going to be to find some more examples. Let's go on to, yeah, what did you say, Todd?
I mean, I haven't watched the 22 mentorship since the end of 22, but so I don't feel like an expert on it. But I think of the 22 mentorship as like the end of a distribution into a reversal, not like a manipulation out of a consolidation. So I guess in that way, would you agree that the double purge theory is different in that way?
Yeah, absolutely. I would say that 2022 mentorship is the best way to time, or the best way to identify something like this, right? Liquidity sweep to the left, market structure shift, and then OTE of that range inside of a fair value gap or a PD array, something like that, right? Something like this.
Right, but not like coming out of a manipulation.
Yeah, I think the double purge is the best way to identify what we saw here. And I mean, we can find lots of examples, guys, right? I mean, here is clear as day. You can see the market go into a consolidation. You can see the draw on liquidity, right? It's obvious. Right here, it's obvious. Like double bottom, failure swings. I don't need to go to my monthly chart to know this is a monthly swing low. What is this also? What do you guys see right here? Right, very little wick, devil's mark. I don't need to pop up a time frame for me to see what are we in, guys? Buy or sell model right here.
So.
I can very, very clearly see my liquidity targets. Fantastic. When I'm leaving these consolidations of the market, what am I going to look for? Look at this. sell stops, buy stops, LR to that low. Where is this coming into? It has to come into something. This premium array. Where is it reaching into? The wick that overlaps the array, right? We're not going to use the body of this SysD. We're going to use the wick of that SysD because it overlaps the fair value gap. Fantastic. LR to that low. Let's look at it again. Every time we go into consolidations, look. Take out the sell stops here. Go into this extended consolidation. Look at that. We have not taken out this low yet. Do you guys see that? Equal lows. So what is the protocol? We can look for it. Sell stops to be taken. We put in equal lows. Now we want to see a run against the buy stops. Again, we're leaving the consolidation range. Are you trading inside of here? Is this fun to trade inside of? No. So look, wait for us to run the sell stops inside the range. Then wait for us to run the buy stops. Then look for an entry. I mean, you're going to see lots in this in the lower time frame. Then you go into here, okay? So this is where it's a powerful tool. And this is something that I don't use regularly in my analysis, but I use at key levels. When the market is consolidating and I expect a reversal, right? What do you see right here? What's the market doing in this? What phase of market delivery is this, guys? Everyone tell me. What is this?
What phase?
What phase? Yeah. Accumulation, expansion.
Reversal.
In here?
Well, I guess after we get out, reversal, but here's accumulation.
Okay. So where do we look for double purges, Yusuf? Inside of what?
Inside of the consolidation. So you'll look for it to be, you'll look for buy side, sell side, and then buy side back up.
I can see that we're running into a monthly low. Mm-hmm. I can see this is a monthly low because this is the first day of the month, right? Do you see that? Wednesday, June 1st?
Yeah.
Okay, cool. Daily market maker sell model into what? Monthly ERL. I'm not going to hop around my time frames. I want you guys to train your eye to start seeing consolidations. What rests below this? Higher time frame PD array, right? You already know that. I don't need to go to a monthly chart always. And I want you guys to start training your eyes, like I have, to start identifying that you can see that monthly swing low. You can see that monthly FVG on your daily chart. You can see it. It's there. It's the same thing. It's there. But you just need to train your eye to see the delivery of sell and buy models and then understand that on a higher time frame, we're repricing what? IRL and ERL. That's all we're doing. Look, ERL to IRL to ERL to IRL back in here. Failure. So we're going to seek ERL to IRL to ERL to IRL to what? Potentially ERL. We're in a consolidation. Look at the monthly consolidation. What have we seen on the monthly chart potentially? What is this? Sell stops taken? Buy stops taken? Are we leaving the consolidation? Potentially. What would that look like? Over the next several months, we could see that. Several months. And we're qualifying it by buy stops, sell stops, double purge out of a consolidation, which has been consolidating for over a year. Since November of last year, consolidation. 2022, over 2 years of consolidation of the market. Now we're looking for a signature to break us out. Sell stops, buy stops. Do you notice how nice this swing low is, guys? Like, how beautiful is this swing low right here?
Juicy.
Juicy, right? Like, super juicy. And look how it's created. Sell stops, buy stops. Into what? What are the buy stops taken into, Todd? What rests above this buy stop?
High time frame PD.
Nice. That's how you can qualify a reversal on any time frame. And I don't need to now you guys are not going to need me to always scroll down for you to see, like, okay, this is the monthly ERL. So now, Yusuf, how do we leave this area if we're bullish? What's the consideration for us? What are we looking for if we're looking for double purge?
Double purge. So if you're looking for double purge up, then you look for buy side, then sell side, then back up.
Nice. What is this?
Here's your buy side.
What is this? Again, not just a random low. This is the sell side. Equal lows, right? Relative equal lows, but into a higher time frame array. Nice. What rests below here based on seeing this daily consolidation and this expansion? What do you know rests below here?
Efficiency.
Monthly, right? You already know that's monthly because you see a daily consolidation and you see what? A daily expansion, right? Remember, what rests below here? From this expansion, a monthly FVG, right? Okay, good. You're training your eyes. It's hard to see. I understand. It might seem like I'm pulling that out of my ass, but you'll see it. Look, right? Where is it? With time, you'll start to see, like, yes, below these consolidations are the gaps, right? Look, there's the gap. Look, there's the gap. I know it's small, but there it is, right? There's the gap. And you can glean that from just one chart, and that's your daily chart. Because you can always glean the higher time frame from the lower time frame. And vice versa, always. A consolidation puts in a pivot, a swing point, which becomes a market maker model, which we're going to talk about in about 10 minutes. Okay, so we're going to leave this area using buy stops, then sell stops, LR to that high, right? Now we have another consolidation of the market right here. Right? What do we expect to see, Yusuf?
Same thing. You're gonna look for.
So let's look left. Yeah, let's look at these stops right
into
here.
the high.
We're failing to close above these prominent buy stops, right? So wait for a purge. Now where does the LR come to? The high that swept the buy stops, right? There we go.
Yeah.
This is just a fractal utilizing these buy stops. That's how we're leaving the consolidated range, right? And again, right? What is this called in here? This entire this wick and this body is called a what? What is this wick called?
Rejection block.
Nice. And rejection block is liquidity, correct? Do we agree that we don't need to sweep this high to call that buy stops? We can also look at this rejection block, correct? This is core content month 4 from ICT 2016. Rejection block is liquidity. Does anyone remember that? Or is that
true?
Okay, I'll make a note of it. So someone just reminder. Send core content rejection block material. Okay, perfect. I will send you guys that to prove to you that you can treat this like buy-side liquidity. You actually can. If there's context, you can treat all of these highs that have equal bodies, all of these, as buy-side liquidity. What do? Take out the buy stops in the form of the rejection block. Now, how are we going to leave the consolidated low? We're going to leave it by taking out sell stops of the market below this low. Right? Look, equal lows put in. Purge the lows, LR to the high. Out of the consolidated range. Out of it. This is power of 3 as well. It's just taking out the buy stops before we get the power of 3. Here's another example. Here's a consolidated range. On the 4-hour chart, I'll be able to show you exactly what that looks like. How beautiful is this, guys? What is this? What's below here? What is that called?
Sell stops.
Okay, we are in a consolidated range, correct?
Yeah.
Notice how we have not manipulated any highs of this consolidation yet. What can price generally, what does price generally do before leaving a consolidated range if we're bearish?
Manipulate?
This is how it relates to power of 3, right? Do you see a manipulation of the highs here?
No. Oh, see, the double purge.
Yes, is power of 3. And because the higher time, only because the higher time frame draw is where, Yusuf? Here, right? Only because of that.
Yeah.
If it was higher, then what could we have done? AMD.
AMD
Yes, which is why patterns are going to fuck you over, right? Because if you treat this like AMD, how many times are you going to lose? Every time, right? Always. But if you treat it like you know where the draw is, well, now you have the advantage of being able to see, oh, here's a double purge. Now where am I targeting? LR to that low, which is LR to this low, which is LR to this low. Fantastic. Price doesn't need to come below these lows. It doesn't need to. But it eventually does, right? And look at how we're probably going to leave the next consolidated range once we come into this area. So again, price eventually leaves this consolidated range. How does it do it? Look. What's taken first? This is a range. You can see it's a range because price is not... How do we know it's a range? What are the 2 criteria I said?
The body's close inside.
Nice, and we don't respect internal, right? Okay, so let me find some internal. There's nothing internal here on this time frame, but what about this? See how price is not rejected by this internal and instead closes through the high? Right? Or wicks through the high? So in here, would you say we're accumulating in here, original?
Yes.
Okay, so what's taken first out of this accumulation range? If we want to move higher, we've reached our monthly level. I'm going to draw it out. Now, again, this means nothing without the draw on liquidity. It means nothing. It's useless. It's useless information. The draw on liquidity would probably be, well, what do you see all of these highs as?
Taylor swing highs.
Yeah, so let's just use the most recent one, right? Low-hanging fruit. How are we going to lead this consolidated range? What is taken first?
The buy side.
Okay, and we have these lows, and we have this low, which are relative equal. Again, this counts as taking a sell side. Take the buy side, take the sell side, run to the buy side. Now again, we form
And we're also respecting a long-term low.
Yes, nice. The long-term low is right here, right? And this is the intermediate term low?
Yes.
Nice, cool. Now you're using AMS as well. Awesome. What do you see in here again? Look at the bodies,
Accumulation.
right? Are the bodies displacing outside the range? If I just drag this box to the body high and lows, what do you see?
Multiple candles inside.
There we go. What's taken first?
Buy side.
Then what's taken? Into what? Not buy side, then what's taken second? Into what?
Into PD array. A fair value.
Nice. What do we do in this gap? This is another lecture I taught you. What do we do in here? Right here.
Order pair.
Yeah, or inducement. What about inducement, right?
Oh yeah.
Remember we talk about shallow raids of PD arrays are usually retargeted? Look at that.
Yep.
Shallow raid, equal lows. This, the suckers are longing this, right? You're waiting because you see the signature of the consolidation now for potentially a double purge, or at least you're waiting for this PD array. Again, you're using it to frame a bias, not for entries. Now it becomes LR to that high. Now you can get into here. Then you can play the next leg higher. So when we go into these consolidations, I implore you to look at how price leaves them. What about this? Look at the bodies. Consolidating or expanding? Someone tell me.
Consolidation.
How do we leave it? What is this? Buy stops, correct?
Raid.
Now these are equal lows, relative equal, inside of what?
High time frame PD array.
What do we say about gaps that do not balance a premium from the inducement lecture? What are they likely targets for? Turtle soups, right? Now we come into premium. Look left. What do we tap into? What is the exact area we were waiting for price to come into? On a higher time frame, what is this?
Breaker.
Yeah, and on a higher time frame, what is this? This is all an order block on a higher time frame, right? Prove it to yourself. It's a daily order block, right? You can see it. Look at the exact level.
Beautiful.
Right? Inside of this wick, let's find the time. Let's find the time frame that this looks really meaty. Let's find whatever time frame that is. I want to find the exact time frame where that's a meaty down close candle. Not good enough. Whoops. I want to see if price comes directly. That's nice. There we go. Right? It doesn't matter what time. Again, I was talking about this with Ellis yesterday. You're gonna see on different time frames, price will respect different PD arrays based on how these arrays are forming. And the reason why I'm using a 6-hour chart here is because I want a candle that's not as wicky. I want this order block to be a defined order block. A really wickless candle. Look at that. There we go. Right? Now we are targeting a key level, a key area, using a double purge to get out of it. Fantastic. So that's what I want to teach you guys with respect to double purge. I want you to use it as a confluence for consolidated ranges and how price will leave them. And let's hop into the last concept, which is going to be market maker models or swing points, which is the idea of CRT. And before I do that, I just want to show you another example here today on the ES. Now it's like jumping off the page obvious, right? first of all.
Definitely.
Let's look at all three indices and let's look at the area of interest. Oops. I want to get rid of this so I don't forget about it. There we go. Now you're going to be like, oh, now I can clearly see it. Because when you do it on the higher time frame, on the lower time frame, you're going to see it way more often. But it's better to learn it on the higher time frame where there's more narrative. And here we can utilize SMT. Okay, so what is clearly happening here? Everyone tell me. Consolidation or expansion?
Consolidation.
Small
Why-
consolidation.
Yeah,
followed
why
by
is it
expansion.
why is it a consolidation and not an expansion?
It's in a range. The PD rays are not. It's not the wicks. The bodies are closing within.
Nice. Okay.
Bodies in the range.
Yeah, this in here, right, is where I would say the consolidation is. I can see a clear deviation of this bodied range right here, right?
Right.
But I want you to pay specific attention to where that low forms in relation to where the high of the consolidation was purged. Look, buy stops taken first, right? Sell stops taken second. Inside of what? What rests below this chop on a higher time frame? Remember? What are we going to see?
PDA.
time.
Fair value gap.
Nice. Do you see the fair value gap right here? Right? Now we have narrative for that double purge being low resistance to that specific high. There it is. That is the framework. Taking out both sides of the market, liquidating, right? Easy positions before a big move occurs. And ICT talks about that happening all the time, right? So, doesn't happen. Well, let's see if it happens here. This is going to be really nice to see on a lower time frame. I'll show you guys on like a lower time frame right in here. Okay, what is this, guys? What is this right in here? Obviously.
Consolidation.
Okay, so on a lower time frame, right? This is going to be much more easy to see. I want you to see how often price negotiates delivering in the same way. Consolidating, 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 consolidating. We leave the consolidation by taking what first? What's the bias, first of all? What are we consolidating from? A bearish displacement leg or a bullish one? What's the draw on liquidity?
Bearish.
What's the draw on liquidity? This low, right? Or these equal lows, right? Do you see the failure swing we put into the market?
Yeah.
Look at the failure swing right here to here. Okay? Really nice, juicy failure swing. How does price leave the area? What's taken first? Sell stops? Then buy stops. What would be even better
Sell.
if we... Yeah, what would be better if we saw right here forming?
SMT.
SMT.
So let's see if we get that. Nope. Nope. No SMT. That would be even better if. Even better if the entire market moves that way. The entire market moves that way of buy side, sell side, then buy side. But if this was an SMT
What about on the bottom?
on the lows, let's see.
Yeah, on YM bottom left corner. A little bit
Oh
more
yeah,
to
we
the
formed
right
this
there.
SMT down here, right?
Yeah.
That's nice. Yeah. Okay. Here's the sell side SMT. I would prefer to see it on the buy side though, wouldn't you guys? If the bias is correct.
There is on the buy side.
There is on the buy side.
Yes.
Yes, right there.
Am I
Well,
seeing
YM
this?
took out that high.
Yeah, maybe. Right, we take out the high, right, on all of them. Yeah, we do. We do.
No, a little bit more left. A little bit more left. A little bit more. Yeah, that high.
I guess yes, you can take it, and Y takes it.
I'm looking at more to the right. There's SMT with ES. Yeah, those two highs. To the right of that one as well.
Oh, you're right. Oh my God, you're completely. Yeah, dude, sorry, I completely missed that. You're absolutely right. There's the SMT. Fantastic. Okay, perfect. So once you see that SMT form, nice, beautiful. Sorry, guys, I don't use the 1 minute chart a lot, so there's a lot of candles. There we go. Now we know it's a nice LR run to that low, right? And the best entry is gonna be what? Not inside of here. What do I teach you? Wait for what? Chain to say delivery, right? Look at how perfect that is. right? Where's the draw? Failure swing. Perfect entry right there. But you're using this consolidated range breaking and the double purge from that. Okay, cool. Enough double purge stuff. It's really interesting, but I don't think it's as like valuable as you know it was touted to be. And I'm not a hater. I'm actually definitely not a hater. I love the MMXM Trader. I just don't think it was taught the best way. I don't know if anyone saw the course. It wasn't taught like I just taught it to you at all.
It wasn't taught by MMXM either, right? It was taught by another person.
OTE
Or
Trader
explained.
narrated it. He always narrates, but it was taught by MMXM. Like it was his curriculum. He made like the content, and then OTE Trader narrates everything. But I don't know if any of you guys saw the course. It was not taught like I just taught it to you at all. It was taught to you more or less like a pattern, which I don't love. As you know,
Fees, is there any, like, as we're just all like kind of getting this concept for the first time, or I mean for a lot of us at least, but is there anything to be aware of? Not like kind of looking for it too much. I feel like I could start to like.
What I would say is look for it in context of consolidation ranges. Okay. If you can do that, I think you're gonna nail out a lot of the bad ones, right? So, like right here, do you see the obvious consolidation range in here?
Mm-hmm.
Would look for it in times like this. See how both sides of the market are taken out? And then we have obviously another draw on liquidity, which is going to be this high, right? Look for it in times where we're leaving and we're breaking out of consolidation ranges. Another one is here. Do you see how anytime price starts to consolidate, you look for on that time frame or a lower time frame? I'm looking at more NASDAQ examples. This one's nice. I wonder if we form SMT right here. We form SMT here, it's really nice. Let me see. Yeah, that's nice. Buy stops. Then the YM reaches below these sell stops. Nice. Do you see that, Todd?
Yeah.
That's really nice. Because look at this range. Look how tight it is. Do you see that?
Definitely.
So now we can say it's LR where to probably this high. So yeah, that's where I look for it. I mean, I wouldn't lose sleep over it. But I think it's interesting. I mean, I'll always teach you everything I think about price and find about price. I will say I don't use it that much, and you guys know that because I've told you that multiple times. Which is why I would focus on the main stuff, which is important, which I have taught you. Again, here you can see. You guys can see it here. I don't need to point it out, right? Do you see the double purge for this consolidation?
Yeah.
Yes.
Right. Buy stops. What's the draw on liquidity? This premium array, right? Because we want to go lower, right, in the morning. So we have no manipulation of the open, right? So the daily candle looks like this so far. Is it likely to just do that?
It should, but manipulation involved.
Right. So you're looking for this, right? So then how do you look to frame this consolidation reversing? Buy stops.
After manipulation.
Nice. Buy stops. Then what do we expect to see next? Sell stops. What's an even better if? This forms right here. SMT, right? What do you see in SMT? It's this low. You see that SMT right there with the YM? Yes, no, maybe?
Yes.
Is this a good double purge candidate? Yes! Why are we not all screaming yes? What? This is perfect! Look how perfect this consolidation range is, guys. Come on. Why is everyone not screaming yes? Look at that. Is this not perfect?
No.
Buy
That's
stops.
true. That
Sell
was more
stops.
like an AM, D.
It is, but look what happens first.
That's true.
So this
Sick.
double purge comes after, right? Or this double purge comes before AMD. Have you noticed that in every example? The first thing we do is take out that high. Why? Who are we disrupting right here? Original.
Sellers.
Yeah, weak shorts, right?
Shorts.
Order pairing their shorts with where?
To the bottom.
So
Windows.
the market is utilizing the liquidity built inside of what range? It's a double power of 3. You guys notice that? Like, this is AMD, and it's also AMD. Do you see that? But it's utilizing these specific stops to get to here. Then it's the SMT, even better if. So yeah, you'll find a lot of examples. Like I said, don't lose sleep over it, but it'll start to pop out more. It will start to pop out more, and you will start to notice it more if you start paying attention to it. Right? This is more or less just a complete broadening formation, but it's very, very similar, right? Buy stops taken right here. Right? The price wants to move higher. There is a higher draw. So we will reach back into these sell stops. Then it will be low resistance to here. And this is a consolidation. It's a broadening formation. What might we see? What might we see right here in the Asian session?
Yeah.
All right, everyone, put this right now. Everyone go on their charts and do what I just did. Let's prove it to ourselves that we might have a thesis for higher prices. Look, right, we have an SMT at the highs to confirm this short-term reversal. Failure swing here, SMT. So now, buy stops. Where is the obvious draw? Where is the obvious draw?
Imbalance.
What do we do from this imbalance? What is this called? Induce it, right? We've induced it.
Inducement.
Why? We've traded to it, but not into it, right? Look at a lower time frame. See that? So now we have buy stops, sell stops. Where's the draw on liquidity, guys? Where is the higher time frame draw on liquidity for the chart right now?
Fair value gap.
The higher
There's a
time frame.
daily fair value gap.
Yeah, what about here? What about these stops here? Right? We're bullish on the day, right?
Yes.
So look how we are breaking out of the consolidation range. So let's come back tomorrow and we'll study that. Okay, this has been very long. Wow. What I want to talk about...
Would you say that there's a balanced price range on the NQ on the hourly?
Yeah, right here. Yep. It's a V-shaped recovery.
Not just there, but like no, right where you pointed at, right there,
Here?
the last, right there, between the CB and the BISI.
Yeah, I would not expect all 3 indices to liquidate this low. I would expect, if anything, SMT divergence to be put in if one of the indices was weaker, which I would be okay with seeing. Right? We gotta remember we have a lot of highly volatile news events, right? So it's not impossible to see large wicks, but I mean, again, price becomes a lot simpler in terms of what I'm going to be trading when I look at the daily chart. What do you think I'm going to be trading for the rest of the week, especially now?
Yes.
Yeah, I'm obviously ES, right? Like, come on, look at that, right? This is still an IFVG candidate. Have we respected this SIBI at the moment?
Yes, so far.
Even this looks fantastic for the YM to reach into these equal highs at the devil's mark. Do you see that? To the tick.
True.
To the tick, equal highs. NASDAQ still has another bearish inefficiency above market price. Do you guys see that small one? I don't like that, really. I don't really love that. But I do like the ES. And I do like how the ES has no inefficiencies in this leg anymore. There's nothing. And also... Look at
SMT candidate.
Yeah, 100%. Yeah, definitely an SMT candidate up here. That's what most likely will happen. Notice how we are respecting what candles in this daily chart at the moment. Up
Order
close
blocks.
resistance. Yeah. What are we failing to respect on the ES? Right. Same up close candle, right? Notice how we closed through, immediately rebalanced. Closed above, ES has bullish order flow by far. Okay, let's quickly talk about candle range theory, which is market maker models are swing points. I'm really going to make this very quick, okay? What I want you to consider, which is always what we've known, is the equivalent of the next day model. Can someone tell me what the next day model is?
We're talking about like if
It's a-
we close this bullish, then the previous day's high is more likely gonna close or break.
It's actually a 3-candle pattern. That's a good point. Yeah, Yusuf, go for it.
The daily sweep with a 15-minute SMT, and then you want to target hourly.
No, that's the Twitter model. I'm talking.
Oh, wait, which model?
Okay, I'm gonna teach you guys quickly something called the next day model, and I might actually push this to another lesson because I don't want to overwhelm you with too much information if it's not.
Oh, next day model, is that the one where
it's a 3-candlestick pattern. I'm gonna quickly show you one example, and then we're gonna do another lesson on this because this is a really good one. So reminder, lesson on next day model. This is something that was taught in the first MMXM trader course, but I don't know if did I ever teach you guys next day model? Like my older students, like Yusuf, Talon, Todd. Did I ever teach you guys?
Yeah, we did it.
I did?
Yeah, we did it.
Okay.
Yeah, it's trading to inefficiency, and then you basically trade the 4th candle out of it. Right?
Okay. Would you guys be interested if I taught it again, like this year?
Yeah. Do it again.
Okay, so
The next day model, do you mean like the next day, like tomorrow?
It's called the next day models because it's a 3-candlestick pattern, and you're looking for so I'll briefly mention it. I'm gonna turn off the recording because I'm gonna do a lesson on this, guys.